Hi guys, welcome back to Upside Down Data. This is an update on the UDPI risk indicator for XRP Ripple. If you guys find this content valuable, please subscribe to the channel, like the video, leave a comment below, let us know what you think and what assets you'd like us to cover, and also follow us on Twitter at Upside Down Data for regular daily updates on risk indicators for a growing number of assets across the market. So we're going to talk about XRP for a few minutes today. What you can see here is the UDPI risk indicator for XRP. But before I dive into that, I want to explain why I think it's important to focus on XRP a little bit right at this juncture. The reason for that is that people are sleeping on XRP. And my message for you is don't sleep on XRP. Now, why are people sleeping on XRP? People often sleep on XRP. I think one reason that's pretty apparent right now is that there's an investigation with the Securities and Exchange Commission, the SEC in the United States. There's some uncertainty about what that's going to mean for Ripple, the company, and XRP, their token. There might be some new regulations coming down the pike, and that naturally creates some FUD, right? Some fear, uncertainty, and doubt about XRP and where it's going. Now, the other thing about XRP is that it has it has a long history. It was around for the 2017 bull market and the bear that went into 2018 and beyond. And there are a lot of people who got left holding the bag during those periods of time. And that hurts. And there's been a reputation that's kind of been attached to XRP that's associated with that. A community of bag holders who are getting by on hopium and who are going to sell the pumps. That right there, I think some people have that assumption, and that causes people to sleep on XRP a bit more than they should. And again, my message for you today is don't sleep on XRP. Don't just go by what you hear on Twitter, right? There's data here, and that's what I'm going to share with you, and I'm going to show you why you really don't want to sleep on this asset in the coming period. So what do we have here? We're looking at the graph of the UDPI risk indicator. Each one of these dots that you see on the screen represents one day, and each day is color-coded by risk. You can refer over to the right where you see this panel, the UDPI panel, ranging from deep red, +5 on top, to deep green, -5 on the bottom. And that red +5 means high risk, limited upside potential, and very high downside potential. And that deep green on the bottom, that -5, indicates the opposite. So very high upside potential and limited downside potential. And if we go over the history of the asset, you can see these periods of time when it went from green to red or red to green. This initial consolidation period before it made its first move in 2017 was green throughout, very low risk proposition. And then that major pump up from less than 1 cent up to 30 cents there in 2017. That first peak, we see a flip red. Deep red, actually, indicating very high risk at that point. And so if you had been a holder then and you were looking at the UDPI, you would have said, well, holding at this point is pretty risky. You could have exited your position and then watched as the price retraced all the way down to 10 cents, which is a good 70% almost. Well, then the price consolidated for a while, right? And it turned green, and then it started to grind up. And then it made this next move up to what is still, several years later, its all-time high. And again, flash deep red, indicating that holding at that point was not wise. And indeed, we got a massive, massive extended multi-year correction that brought risk way, way, way down to the green zone again. So once again, if you had been following a risk indicator like the UDPI at that point, you would have been able to plan your entries and exits at these opportune times. You would have been able to say, after this spike in 2017, at the end of the year, beginning of 2018, I want to exit my position. So you'd be able to do so in plenty of profit. And then as risk grinded down, you could have reaccumulated and waited for this change. We see this change in direction around that, in March 2020 with the COVID crash. And then we've been in an uptrend ever since. And what we saw earlier in 2021 to bring us closer to the present is that risk spiked way up again, flashing a very high degree of risk and suggesting that holding at that point was unwise. And indeed, we saw that May crash across the market that lasted several months and brought the UDPI risk again down into pretty deep green territory, once again, this past summer, indicating a good time to accumulate. Now, what's worth emphasizing there is that if you were around during that time, listening to the chatter on crypto YouTube and Twitter, you would have heard people calling for Bitcoin to drop to 20K, even 10K. There was a lot of fear in the market then. But what a data science approach offers you, and what looking at a model like this offers you, is you would have been able to tune out that noise. You would have been able to just shut out all of the emotion and all of the FUD. And you would have been able to say, well, what did the data say are actually likely? And it just wasn't plausible, according to the data at that time, that we were going to get a much deeper dip than we already had. When we were sitting there in June and July, and we had already retraced 60% on Bitcoin, much more on some altcoins, that was a very good buying opportunity. And the people calling for much lower were simply wrong. And this empowers you, this approach, to know that and to be able to tune out the emotion and the fear and all the chatter and to know what the actual probabilities are. And the probabilities then were high upside potential and very limited remaining downside potential. That means that it was an asymmetric trade in our favor. Okay, so that's the past. What about the present? Well, we can see that we had another run up in the last couple of months, and risk got elevated again a bit. It turned orange up toward that 2 UDPI reading. And now it's been consolidating and coming back down again. And I'll get more specific about that in a moment. You might find it helpful to look at price action in parallel to this risk indicator, because what you can see is that entering in the green periods and then exiting in the red periods will call the tops. You've been able to maximize your gains and reduce your risk at those tops, take your profits if you had been following this indicator, and you will be able to do so in future situations as well. These red peaks corresponded to the actual peaks in price. And so when you see it flashing red, that means exit your positions. Not financial advice, but this is a useful tool that you can use as part of your own research. And then we have this bear market ran up earlier in 2021, again, flashing red. That means good time to exit your positions. And indeed, that was the top. It called the top more recently as well. And then we had this pullback. Call that as a good buying opportunity. And that, again, brings us close to the present. The one other way that you might want to look at this information to make it maybe a little bit more intuitive is just looking at the output of the model. So here, instead of looking at the price action color coded, we're actually looking at the oscillating model. And so when it spikes up all the way to the top here, that's a reading of 5. And you can see that in the color coding as well, but you can also see it based on its oscillating movements up and down. And when it goes all the way down into these lower levels, you can see that it's green, indicating low risk, but you can also see that it's pulling all the way back, down here to more recently to these -4 regions, back up to this +4 region. And now where are we sitting? Well, now we've pulled back on risk again. And we are sitting, to be more specific with you, at -1.32, which is a pretty low reading. Again, that means there's more upside than downside potential. It's not maxing out the scale, but it is suggesting that it's a favorable time to be entering or holding. Again, not financial advice, but this is what the data suggests. Now, the last thing I want to emphasize is that we're offering this as one tool to be used in combination with others. And so this is not the only risk indicator out there. And XRP is not the only token that you might be interested in buying into. And we're continually adding these risk indicators. You can follow our channel to get the video explanations as they come out, get the full detail. You can also follow us on Twitter for daily updates about this. But what you can see here, just looking at a glance across the 8 assets that we have modeled so far, you can see that there are 3 here that are pointed to the left, right? 3 gauges here that are pointed to the left, which means they're in negative territory, which means that they are relatively favorable right now. There's more upside potential than downside potential. The risk to reward ratio is relatively attractive right now. That's also true of ADA actually coincidentally sitting at the same minus 1.32. It's also true to some extent of H bar, which is at minus 0.73. It is not true of the others, right? That doesn't mean that the others can't run. It also doesn't mean that XRP and ADA can't pull back. They can, but it means that in terms of the likely upside versus downside potential, it means that the ones that are pointed to the left right now are especially favorable. The risk to reward ratio is especially attractive. And so using these in combination with one another is going to be really informative because it's going to let you make decisions about which of multiple choices you want to hold. Do you want to hold ADA or do you want to hold Atom? Again, this has nothing to do with what the fundamentals of the projects are or their long-term price trajectories or anything like that. It's about what's the upside versus downside potential in the near future, in the next series of weeks and maybe months. And according to that, what we see is that there are some that seem to have more room to run to the upside. So this is how you can use that information in combination with other risk indicators. So I'll wrap up there. Thanks for watching, guys. Make sure to subscribe to the channel, give a like, let us know what you would like us to add to this Data Hub next. Follow us on Twitter for regular updates. And remember, with the UDPI, we're all going to make it.